My guest today is Matt Liu. Matt is a co-founder at Origin Protocol. Welcome to the show, Matt.
Thanks so much for having me. Excited to be here, Andy.
Excited to have you here, Matt. Look, let's do what we do at the beginning of the show. It'd be great if you could please introduce yourself. I'd love to hear a little bit of your personal and professional backstory, really what you've been doing in the lead up to co-founding Origin Protocol, which I do know was a little bit ago, but yeah, please go for gold. What's your story?
Yeah, sounds good. So I've been in tech startups my entire career. I started out as one of the earliest product managers at YouTube, was the youngest employee there for quite some time. And that was a, really revolutionary experience for me, right? Super impactful in terms of how I think about technology and having impact in the world. It was just really amazing to see just the breadth of users that we were able to reach and how we were able to transform user-generated content and video streaming and all of that. So that was a pretty masterful, I guess, like course in entrepreneurship and in startups. So very blessed to have been able to go through that and being mentored by the co-founders, Chad Hurley and Steve Chen. From there, spent a number of years post-acquisition at Google, helping build up the monetization systems for YouTube. And then post Google was VP of product at a couple other startups. Not in Web3, this is still pretty early, but was head of product at a startup called Quickie and another called Bonobos. Both of those were also eventually acquired. Very fortunate to be a part of companies that had successful exits and product market fit. And that after that, it was really, I kind of like wanted to scratch an entrepreneurial itch. And this was, wow, is over 10 years ago at this point. And I decided to sit out on my own and start building startups. And the first 3.5 years were actually rather challenging. We were trying to work on a couple different ideas. They didn't really work. We had to pivot probably 10 different times. And thinking back on it, for whatever reason, we decided that we are going to bootstrap until we had enough traction to raise serious amounts of capital. And that traction was actually pretty elusive for quite a couple of years. Ended up being, 3.5 years or so where me and my former co-founder were slaving away, trying to build products, dipping into savings, eventually got to generating some cash. But it wasn't quite the venture scale idea that we really needed. So that was a pretty dark period in some respects. In the other respects, it was actually pretty, again, a great learning experience, right? So through that period of time, I learned how to be a jack of all trades, learned how to be a better software engineer, designer, sales, customer support, legal, accounting, whatever it might be. And I think that general purpose background helped me a lot going forward. Fast forward a little bit, I switched co-founders and began working with Josh, who's my current co-founder at Origin. And we very quickly realized that, we had both been doing startups for a while and had been working with different founders. And it's almost kind of like dating and then you find someone that you want to marry, right? And so Josh and I really hit it off and started working really in sync. We were able to launch actually two businesses before Origin in the span of about a year and a half, both of which had successful outcomes. One of them was a more of a lifestyle and cash flow business that was spitting off cash. We took all that money and plowed it into crypto. We know how that turned out. And the other was more of it was kind of like a bill negotiation service that we ended up selling the tech out when we decided that we're going to focus full time in crypto. So that brings us to 2016 when we went all in. We both had previous exposure to Bitcoin fairly early on. Josh mined some Bitcoin in 2010 off his laptop and then forgot about it. I got my first Bitcoin in 2012 and then also participated in the Ethereum crowd sale in 2014 and then kind of forgot about those as well. But in 2016, when the activities really started picking up, that's when we went all in. We converted our previous two businesses, all the cash and assets into crypto. And then 2017 is when we decided to start Origin and focus on having a deeper impact in the space as opposed to just trading and investing, which we were doing in 2016.
Got it. Look, thank you, Matt. And man, you have been very busy indeed. That's quite a story. I guess you've been there on the ground at some reasonably pivotal moments in tech. If you could look at it like that, sort of being there at the beginning for YouTube, very early in Bitcoin and the Ethereum pre-sale. So yeah, those are, as I say, some pivotal moments in tech. So yeah, look, fascinating ride, I'm sure, and maybe we'll touch on some of that again later in the
Yeah.
show. But yeah, Origin Protocol. So, look, it's a bit of an interesting one because, and I guess this is a very common story, certainly a common story in startups. It's no different with crypto startups. Is you come up with an idea, and then maybe you can't quite get the right product market fit. You're for a variety of reasons. Maybe you're too early, and you need to pivot, right? And I think that's the story of Origin Protocol. But that's the short version. So maybe yeah, expand on that. Tell us the kind of the origin story, if you like, for Origin, and then yeah, the pivots that
Yeah,
follow, and then we can
sure,
talk
sure,
about
sure.
where
Yeah.
you are now.
I think you hit the nail on the head. For better, for worse, right? We've been in the game a long time and had to refashion ourselves a number of times as well. I think it'd be really have been great if we, kind of had the same initial vision and stuck through it with this 6 years. But that's not necessarily how things always work. And sometimes you do actually have to pivot and change directions. And thankfully, we've been able to do that a couple times and have found traction multiple times. So the original premise of Origin was building a decentralized marketplace protocol that would allow anyone to buy and sell anything on chain, right? And so decentralized commerce was the idea. We wanted to figure out if we can disintermediate a bunch of different marketplaces and actually bring off-chain goods and services on-chain, right? So probably 5 or 6 years before its time. And it 100% was a bit too early, right? So for many reasons. First, Ethereum itself was rather immature at that point, right? We all know that even today it's plagued by like high gas costs and the user experiences aren't the best. The wallets have come a long way and dApps have come a long way, but back then it was very, very different, right? MetaMask was still very immature. The NFTs hadn't even been invented yet to represent, as a way to represent different types of assets. And so it was way, way too early. And one of the things we ran into was, hey, why would people want to buy and sell stuff on chain if the transaction costs are so high and the transaction finality is pretty slow? And meanwhile, some of these existing Web2 marketplaces and e-commerce providers are actually serving the market pretty well, right? And so I think we were a bit early and a bit too idealistic in terms of how we can disintermediate some of the existing players and then take those transaction fees and pass them to users. Those transaction fees that an Airbnb or a Shopify or Amazon or Uber take, they are high, right? But they are used to make those services better, whether it's customer support or marketing, et cetera. And so in some cases, I would say that we learned that decentralization as a ideology is not always the best thing, right? It depends on the type of technology you're building, type of use case, right? And so if you actually need something that is censorship resistant, that is permissionless, then I think decentralization and the blockchain are 100% the best tools, right? But if decentralization is not a necessity and you can do a lot of stuff in a normal database, then it's actually just tech overhead that makes it all harder. So Origin started out with this marketplace protocol product. And after, 2 years or so of trying to make this work, we realized it probably wasn't going to happen anytime soon. And so we did a bit of a pivot and we got into DeFi, launched our OUSD product that's still live today. At peak, it hit over 300 million TVL and was generating yields in the, 20-30% APY. That since has changed a little bit because of treasury bills having high yield and then DeFi yields coming down. But that was our initial foray into DeFi. And this was summer 2020. That market took a bit to mature, and our products took a little bit to mature. We have since then launched oETH, which is very similar to OUSD. It's a liquid staking token aggregator that allows holders to passively earn yield directly in their wallets, it's automatic yield generation with no hassles, and it's definitely stronger yield than just LSTs alone, right? And so that's our competitive advantage there. Right now, it's low nine figures of TVL as well. We recently also launched a product in the LRT space. It's kind of a newer product, but starting to get some early traction there as well. LRTs being liquid restaking tokens. Much more to talk about there, I'm sure, in the future. But along the way, also, we actually built an NFT launchpad business and marketplace business in 2021. That's where things got really crazy for a while in our zigging and zagging, where we ended up striking a chord, did a couple really awesome NFT mints, built up an entirely different business line there, where we're working with influencers, celebrities, NFT projects, etc., to basically do their mints and then also engage their users thereafter. And so that was quite a journey as well. But today, our primary focus is on the DeFi side. And so those products that I mentioned just a little bit earlier, oETH, OUSD, and then the new liquid restaking product.
Yeah, there are lots going on, Matt. Lots going on.
Yeah.
Yeah, I mean, again, that's kind of the story of, yeah, it's weird how we've had some of the early tech moments, and now you've kind of encapsulated, the last 3-4 years in crypto, sort of the DeFi boom, and then the NFT boom, and now, of course, new narrative is liquid restaking, is a lot of people are very excited about. And look, here you are at the forefront, I guess, of a new emerging compelling narrative for 2024 and beyond. So, yeah, well, let's talk about this. So, yeah, just for people that maybe aren't aware, or just explain it a little bit, what we talk about, what we mean when we talk about Ethereum restaking or liquid restaking.
Yeah, sure. So I guess two powerful concepts like restaking in itself and then adding liquid restaking on top of this restaking paradigm. So restaking is this pretty transformative new paradigm and concept, right? And it's really being pioneered by the leader in the space, EigenLayer, although there are other forms of restaking now as well. And the core premise behind EigenLayer, which is the largest restaking protocol with, I think, close to $8 billion of TVL locked up right now, is how do you actually share the security that Ethereum brings with its, 1 million plus validators and, 20 something plus percent of Ethereum staked to secure the network. How do you allow that security to be shared by other protocols? So other infrastructure, middleware, et cetera, right? And the reason that this could potentially be a massive paradigm shift for all of Ethereum is right now, a lot of these newer protocols, right? Let's say like or maybe not even a newer protocol, but these new and established protocols, right? Oftentimes they need to spin up decentralized nodes or validators to secure their products as well. So take something like Chainlink, right? It has a network of Chainlink operators, and take something like 1inch, right? They with their 1inch product have a network of these relayers, same thing. Basically, you have to like stake certain tokens and run certain software to kind of like provide the services in a decentralized way, right? Now, this is challenging potentially for a couple reasons on the protocol side. So your new protocol, you want to build a new business. Well, not only do you have to build the technology, you actually have to go out and acquire nodes or validators, right? And that's like a very much like a BD and sales effort. And if you're starting from a cold start, it's rather difficult, right? Should someone actually run your software, potentially have to buy custom hardware to run your software in certain cases to help secure your network when your network is unproven, right? So there's a bit of a chicken and egg problem for some of these new decentralized networks that start out. So that's kind of like core problem A to keep in mind, right? Let's put a pin in that. It's a hard time. It's hard to bootstrap new decentralized networks from scratch. Another problem on the other side, let's call it core problem B, is we're seeing that staking, as it's getting more uptake within Ethereum, it also creates a downward pressure on staking yields. And so when Ethereum first started, right, when staking first started, even before it switched to Ethereum switched to proof of stake network, yields were like 7 or 8% APY, but you just didn't know when you were going to be able to unlock, right? And as more and more ETH was staked after Shanghai, that's more security for the Ethereum network, but at the same time, the yields have been compressing, right? So they've gone from 7% to 5%, and now it's something like 3.5% roughly for a validator, right? And so these validators are earning less Ethereum by doing the same amount of work to secure the network because the Ethereum rewards are split amongst many more validators, right? And so that's kind of core problem A, right? The yields are declining for the validators. So EigenLayer basically wants to create a new protocol that acts as almost like a marketplace between new protocols, right? They call them AVSs, as well as validators that already have Ethereum staked and people holding LSTs, liquid restaking tokens. And so the idea here is, can you take Ether that is currently staked to the validators and use that to secure new networks, right? And so analogy that maybe this is kind of like a layman's analogy, right? But if you think of securing a network as almost like house insurance, right? Imagine if like I had a house, right? And I had like house insurance, but then let's say I built a tree house, or I built a pool house, or some sort of guest thing in my backyard, right? Well, I want that house insurance to kind of insure all that. But because I'm adding new houses here, right? To my one insurance policy, the insurance is also going to require a higher payout, right? Because there's a bit of higher risk. And so EigenLayer is almost like this insurance layer, right? So it's saying, let's use the same ETH that is staked to the POS network that secures Ethereum. We'll use that to secure the future chain link, the future 1inch, the future whatever that Origin builds, the future 10,000 apps that can be built on EigenLayer. These networks then don't have to bootstrap their own decentralized systems, right? And they can just tap into the security of Ethereum. And in return, right, so that's solving core problem A. And in return for solving that core problem A, we're actually also going to solve problem B, which is these projects can still give rewards, right? So tokens, but through the EigenLayer protocol, it's then rewarded to those validators. And so as a validator, I can potentially earn ETH, right? The base staking rate, let's say 3.5% currently today. But with EigenLayer turned on, I can opt in to secure other networks and potentially earn 12, 13% in the form of other rewards tokens. And so validators can make potentially much higher yield, which gives them better just like operating health, right? Running a validator business, right? It allows solo stakers to earn more. It allows these professional validators to get better hardware, build up their infrastructure to secure the system better. And then again, on the protocol side, it makes it easier for networks to bootstrap, and they can then just focus on user acquisition or whatever it might be, right? And so the idea is making everything a lot simpler and easier to get started. And then EigenLayer in the middle, right, is able to obviously benefit as this intermediary protocol and service provider, right? And another way to describe this entire paradigm is, this is my own version, right? So if we look at the Cosmos network, right, there's the Cosmos IBC, which is kind of like the base layer protocol that allows for all these different app chains to run on top of it. But it also creates this interoperability protocol that allows assets to be easily transferred from chain to chain, and for users to basically have like wallets on all these different chains, right? And that's kind of like a initial way of like aggregating liquidity and aggregating security measures for the Cosmos network, right? And so it's fairly easy to launch a Cosmos app chain. Well, this EigenLayer thing is a different technical approach, but I think it ends up solving the same problems. And in a way, it's almost like, hey, let's allow Ethereum to kind of have Cosmos-like functionality, right? Different types of protocols, different side chains, whatever it might be, app chains, in theory, to run on top of Ethereum via EigenLayer, and create this kind of like interoperability layer with shared security, shared liquidity, et cetera. So I think that's another way to actually look at what some of this stuff is doing. So in a nutshell, EigenLayer and this restaking narrative and technology are positioned for hopefully like a very, very transformative mainnet launch that really changes the game for how much of the Ethereum and EVM ecosystem operates. Now, the technology is still being developed, right? It's still in kind of testnet phases, but it's clear that there's a lot of excitement around this technological principle, and that's why so many people are depositing capital to EigenLayer and kind of what's the word? I guess like getting their positions within the ecosystem and collecting EigenLayer points for future EigenLayer token airdrops.
Yeah, and I guess the one way of thinking about this as well, Matt, is that the earlier people do decide to get involved and look at restaking some of their staked assets, then there's a variety of different ways that they can be rewarded the earlier they are. Is
Right.
correct? Yeah.
Yeah. Yeah. Absolutely. Yeah. And there is some well, there's probably very little risk today depositing capital to EigenLayer for a couple of reasons. One, there's a giant honeypot of almost $8 billion, right? That is still there. So I think any type of exploit risk is quite low. And also, if you look at the current smart contracts, your principal is just being held in these smart contracts, right? And so there isn't really much principal risk of, Ethereum or LSTs being slashed or taken away for not properly securing the network, at least not yet, right? And really what people are betting on is the EigenLayer points and what that means in terms of future EigenLayer tokens. Now, when EigenLayer actually does launch on mainnet, with the core protocol as well as the first AVSs, they're actually launching one as well, EigenDA. There will be some risk, right? That principal risk is put up at risk, just like Ethereum validators can be slashed. There are potential slashing penalties if some of these new protocols built on EigenLayer are not functioning the right way. But of course, they're going to put in the necessary precautions to hopefully minimize that while optimizing for higher yield for validators. So yeah, it's really, really exciting concept. Thrilled to be along for the ride. I guess I should touch on a little bit what liquid restaking tokens are. So similar to liquid staking tokens, LSTs, the idea is when you deposit capital, you get an IOU token that allows you to use that in DeFi or to be liquid. You can get out of your position. Right now, EigenLayer has a 7-day withdrawal cooldown period. Ethereum has a minimum like 27-hour unstaking period, but that can actually go longer if everyone's trying to unstake at the same time. And so the LST market is also huge and thriving. The core key leader there is Lido. They definitely dominated the market when Ethereum didn't have withdrawals, and by making their token liquid, it meant that people could get in and out. And so they were able to get huge market share. And now stETH, their liquid restaking token, is integrated all over different DeFi protocols in many different chains. And it's become a bit of a money Lego, right? And so the LRT craze and narrative right now is very much predicated on a similar theme, which is like EigenLayer deposits right now are not liquid, right? If you want to have liquid, and if you also want to have composable money Legos that can be used throughout DeFi, then you want to participate in EigenLayer via liquid restaking tokens. One of which is something that we launched called primeETH. There's quite a few others, but the idea is you can get instant liquidity, you can get out of your position, you don't have to wait the 7 days. And then on top of that, most of these projects are offering some additional incentives on top of what you would be getting with just EigenLayer itself.
Yep. Okay. Well, primeETH then. So just explain or Prime Staked is the website. So if people want to get involved and have a look, what is the easiest way that they can do that? What do they need in advance, and then what do they do?
Yeah. So there's two ways to get involved, right? One is if you want to participate with LSTs, right? So you can use, like I mentioned, Lido's stETH. You can also use Origin's Origin Ether, OETH, which is one of the highest yield earning products that are supported by EigenLayer. So whenever EigenLayer will periodically open and close deposits. So whenever deposits open, you can go to primestaked.com, which is the website for primeETH, and then you can take your OETH or your stETH or your frxETH, whatever that's supported, and you can deposit that via primeETH. And what primeETH will do is it will handle the deposits to EigenLayer, but give you a liquid IOU in the form of primeETH that can be traded on Uniswap and also earns extra incentives, just like the other LRTs. A second way to participate, which is coming on real soon, so early next week. So I guess it's a little bit of a pre-announcement, and you can just participate with native restaking with Ethereum. And so the way that works is rather than depositing an LST, right, you actually just deposit ETH, and then that goes to EigenLayer's eigenpods, right? There are no deposit openings and closes. It's always open. And so starting early next week, if you wanted to use primeETH that way, you can show up with ETH, convert it to primeETH. You'll start earning EigenLayer points, as well as we're throwing in some EigenLayer bonuses, and then you'll also earn points on our side as well that will turn into future additional incentives. And so you can stack incentives on incentives while having a liquid restaking token versus going directly to EigenLayer and then not being able to have that liquidity and the added bonuses that we're adding on top.
Yep. Thank you. Thank you, Matt. You talked about some of the risks earlier and how, maybe there's not too much principal risk, but what about as everything goes live and everything is more interconnected, money Lego on top of money Lego, composable, but as everything becomes interconnected, is there any kind of, I don't know, contagion risk? I'm not sure what the best way to describe it is, but if everything is just locked up and then locked up upon locked up, what kind of risks can become possible, and how are we mitigating against that?
Yeah. So again, just to reiterate my earlier point and what you just said here, I think there's a pretty fine dividing line between like pre-mainnet and then post-mainnet, right?
Yeah.
So pre-mainnet right now, there's I would say like, virtually no principal risk, right? Really what you're doing with your principal is seeing how much you can earn on it, either through EigenLayer directly or through an LRT like primeETH. But the only risk you have is maybe not making as much money as you were hoping to make through token airdrops, right? But you're not going to lose your money. Post-mainnet, I think there are two risks, right? So the first of which is what you were talking about, which is this capital is being used to secure multiple protocols, right? These AVSs. And if one of them has some issue and has a slashing event of some sorts, you can lose principal, right? Now, the EigenLayer team is taking like a bunch of precautionary measures to, kind of like mitigate this. And some of this is beyond my scope of technical understanding, but obviously it's like the core premise of what they're doing. And so they have to make sure that there isn't a, major slashing event that can lead to contagion. Now, theoretically, and I'll say theoretically, if they secure an enormous amount of capital, right? Let's say they like 10x the amount of ETH that's restaked to EigenLayer, right? And there is a catastrophic slashing event, right? Where I don't know, billions of dollars are slashed or something. That could present a crisis moment for all of Ethereum mainnet if a bunch of validators and a bunch of ETH are offline, right, and not actually securing Ethereum mainnet. And so full transparency, Vitalik has written a bit about this and talked a bit about the risks and how rehypothecating that capital to secure additional protocols can be a risky thing and is something to, really think through and make sure you get right. But I think the direction that this is going is I think a lot of people are going to be willing to bet on the EigenLayer team and their rockstar developers to solve this problem, or at least to put up the right guardrails so that widespread contagion doesn't happen, right? So I think that's like one area of technical risks that really needs to be handled properly. But that's also where the reward is, right? If you can figure out, as EigenLayer team has purported, they figured out how to do this, I think the upside is absolutely enormous, right? And that's where we're seeing these like really large participation rates by people, right, in the community. But also just like if you look at the OTC valuations for EigenLayer trading, they're very, very like substantial, right? I wouldn't say that they're necessarily even like rich or off base given the size of the opportunity. But it could be a one of one, right? If this works, like no one else is doing this. And if they do it properly, it can totally revolutionize Ethereum. Now there is actually a second risk that isn't talked about as commonly, which is like, will there be enough of these like AVSs where there's demand to use the restaking services, right? And so there are already a number of projects building on top of EigenLayer. There's a lot of heat here, but I think the jury is still out to see if hundreds or thousands of or tens of thousands of kind of these different types of products, right? Whether they're new chain links or other type of like infrastructure or decentralized search like the graph, or maybe there's some sort of like decentralized file storage thing that's built on top of EigenLayer that's more reminiscent of Filecoin or something like that, right? These types of like services, will there be enough of them? Will it mean for enough economic output for the EigenLayer restakers, for these validators to actually earn the returns that EigenLayer is kind of advertising? And so I think that's more of a business risk in terms of the demand, developer outreach, convincing them to use this new tech stack. There's a lot that needs to go right there as well. But that's probably more of a, hey, does this business actually work in driving a lot of value? But there probably isn't a security risk or a, hey, you might lose your money as a validator or as a restaker because of that risk. It's just if it doesn't actually work and there isn't that much demand, then you're not going to make as much money securing the networks as you think you would.
Yep, got it. Thank you, Matt. Well explained. And look, funnily enough, just as we've been recording, talking today, I don't know if you have anything open in front of you, but Ethereum just crossed $3,000 US for the first time since I think April 2022. So yeah,
Right.
almost 2 years ago. Exciting.
It's very exciting, yeah. And actually, one thing that was kind of interesting to see is there were a lot of theories around how some of this like restaking capital, right? Whether it's going to EigenLayer, or also there are some of these other protocols that are taking pre-deposits like Blast or Manta or whatever, right? And there's $1 billion plus dollars of capital in those protocols as well. Is that going to create like a sink for Ethereum, right? And we didn't actually really see that play out. And it seems like for a while there, ETH which is kind of holding steady and didn't really do well compared to like BTC or alt L1s like Solana, or some of even the newer ones like there's like Sui or like Say or whatever, right? But it seems like in the last week or two, Ethereum has really picked up and is catching up. And so I think it's probably a combination of this restaking behavior, as well as rumors of the ETH ETF that are driving this move.
Yep, very much agree. All right. Well, look, Matt, as we finish off this part of the podcast, again, just for people that are want to have a look at Prime Staking, just again, tell people where they should go so they can have a look.
Yeah, so primestaked.com. And then there's a DApp there where you can use the Mint. There are also docs where you can read more of this stuff. If you want to learn more about EigenLayer itself, you can go to eigenlayer.xyz. That's kind of like the base protocol that we're built off, and LRTs are built off of.
Awesome. All right. Well, I reckon what we do now, Matt, is we'll go to a very quick break and then we'll come back. We'll have some fun. We'll finish off by running you through the very famous crypto conversation hot take round. Back in 1 second.
Sounds good.
And look, we are back. And I'm with Matt Lewis, co-founder. Matt is the co-founder at Origin Protocol. Of course, today we've been talking about, staking, restaking, liquid restaking. With primestaked.com. Fascinating stuff. And of course, we just saw Ethereum cross US $3,000 for the first time in 2 years. So lots happening at the moment, as always, in crypto. But yeah, Matt, I like to finish each podcast with a quick round of rapid fire crypto conversation hot takes. Are you up for it?
Yeah, absolutely.
Just going to run some questions at you, Matt. Just want you to give me kind of quick, rapid fire, hot take style answers. Question one for you. I think we know what you'll say, but where would you say that you sit on the Bitcoin maximalist to multi-chain opportunist spectrum?
Oh, definitely multi-chain. I believe in a world of many interoperable layer twos, app chains, etc. I do think that Ethereum will maintain its pole position as the dominant smart contract network, and a lot of liquidity will continue to accrue to Ethereum and its derivative projects like L2s and rollups.
Yeah, nicely said. All right. Well, Matt, what would you say is your firmest conviction crypto opinion?
I think this is probably more a conviction about TradFi that relates to crypto, but I am probably one of these like permabulls. And so I do think there's a case where Bitcoin sometime in the next decade will cross like $1 million. But I think a large part of that will probably be due to the US dollar weakening and devaluing as a global currency. And so I think all of us in crypto, we might not just be like, millionaires, we might even be like, you know, 10, 20, 100, 1,000x that. But the downside might be that a McDonald's hamburger costs like $500 at some point, right? And so I think we're going to see both price appreciation in kind of like unprecedented ways for Bitcoin and other crypto assets in the next 10 years. But I also think we're going to see massive inflation for very common goods.
Yeah, makes sense. Look, Bill Gates famously said that we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. So as someone who's been involved in blockchain effectively since the beginning, you'll be kind of familiar with this. But if we look forward 10 years' time, never mind, Bitcoin may well be $1 million, and a Big Mac may well be $500. But look at maybe the technology side of things. Maybe let's say Ethereum.
Yeah.
What does Ethereum look like in 10 years' time?
Yeah, that's actually one of my favorite quotes, by the way. And I tell my team and the community that all the time. We always underestimate compounded growth. So I think that's definitely true, right? They're going to be like all these unknowns that are going to be really exciting. But I think Ethereum is going to be at a place where it's like hyper scalable and efficient, right? Even if it's just the settlement layer, and then things like EigenLayer and ZK rollups and stuff make Ethereum super efficient. But I think the best case scenario for Ethereum is that it actually becomes more and more like under the scene, right? There's just so much stuff built on top of it, so much utility, so many layers of abstraction that everyday users that don't even understand crypto are going to be doing a lot of their financial and also technological operations built on the back of Ethereum without even knowing it, right? And
Yeah.
so I think we get to a place where whether it's like decentralized finance or social, or even things like supply chain type provenance, I think NFTs are going to be huge. I think there's going to be a convergence of AI and crypto by then, right? Where we're going to need decentralized compute power and decentralized LLMs and things like that. And so I think Ethereum is going to actually be the decentralized supercomputer that Vitalik first posited in the initial papers. And it's going to be reality in 10 years, even though right now it still seems like a far cry from um, what is possible.
I like it. Very nicely said, Matt. All right. Well, here's another favorite quote of mine. You'll be familiar with it as well. It's by sci-fi author William Gibson, who of course said that the future is already here. It's just not evenly distributed. With that in mind, Matt, can you think of an example of the future being here right now, but most people aren't aware of it?
Oh, that's a great question. Um, well, okay, so I think there's I would answer this in two ways, and I don't think either one of them is that controversial, right? So I think one of them is like true digital ownership in the form of NFTs. That exists today, but it had its kind of like first hype bubble and had a lot of disappointing um, kind of real utility, right? And we saw most NFT activity, even today, is still around just like speculative assets, right? But the idea of true digital ownership that can be proved on chain via the blockchain, right? I think is going to be extremely powerful, and it's going to represent all different types of digital assets, whether those are like swords or toys or vehicles or houses in the metaverse, or they can represent off-chain assets, right? Like things like treasury bills or real estate buildings or even barrels of oil and things like that. And so I think this concept of verifiable true digital ownership is here today, but it's kind of taken a little bit of a backseat given the bear market in NFTs and overall in the past couple of years. And so I think that's one of them. I think the other one that people realize is here, not to just kind of jump on the hype wagon, but they underestimate the impact is the AI revolution, right? And so I think we're seeing the very early innings of AI where we're starting to get to that inflection point where we have cool chatbots and we have like custom GPTs and things like that. But more recently, I've seen AI in like robotics and hardware that can be pretty transformative, right? And so just imagine an army of like small robots that can take care of things for human beings. And I think that AI also at some point we'll get AGI, right? And then it'll be like computers that are creating new programs to make themselves better and to kind of like scale the world in a place where they perhaps don't need as much human oversight. And so that's a very, very like exciting, but also scary proposition. So I think we've talked about it. A lot of people know of this concept, but when it hits, I think it's going to be like this truly exponential curve of innovation and impact, and like the world will look nothing like it does today, a decade from now.
Yeah, I mean, really well said, and you're exactly right. And it's just, two things there. It's exponential growth, and obviously, it's the singularity, the idea that, humans, we're not used to exponential thinking, and it's going to happen fast. And it's called a
Yeah.
singularity because we don't know what it looks like on the other side of
Yeah.
that. But look,
Yeah.
if we bring it back to the kind of the real world or the past 10 years or 20 years, Matt, famously you were one of the early guys on the ground at YouTube. So you saw that kind of staggering early growth of YouTube,
Yeah.
but it's still going to the point where now, Mr. Beast videos get hundreds and hundreds of millions
Yeah.
of views, not just from kids, but I watch Mr. Beast. Everyone watches Mr. Beast, and people like Mr. Beast or Joe Rogan, they've kind of disrupted the way that content is made and distributed. But what is the future of that? Where does YouTube go in another 20 or 30 years? Or what does content look like in that time? What is distribution? Where does that go? And I guess AI is involved, but any thoughts?
Yeah. Yeah. Um, all really great questions. And I agree with you. Like a lot of these like transformative technologies, they kind of like are under the radar first, then they hit an inflection point, then they go explosive. But then they can go really explosive for years and years and years, right? The amount of revenue YouTube generates each year now, and just from advertising, is like I believe tens of billions at this point, right? When I was there, like we were working on our first, like, how do we get to $100 million annual run rate at YouTube, right? So big difference there. And in terms of the overall reach of the product, the number of active users, number of use cases, that's all increased. But I do think it will continue to scale, right? I forget the exact stat, but like there's something like, 1.5 billion or something users that aren't even on the internet yet. And so number one, I think those users are going to gain access and get, whether that's through cheaper phones or satellite, Wi-Fi or whatever it might be. And so I think more and more people are going to come online. So that's one thing that will further fuel growth. I think the remixability of content and the personalization of content are going to go through the roof. Even like right now, there are just like really powerful recommendation engines from YouTube, right? And these aren't they're still machine learning. It's not quite like the AI type stuff that can really tailor stuff. And so like recommendations themselves are going to be better, but like the content itself can be generated by AI. Already, right? We're seeing Sora, which has just launched in kind of private from OpenAI just this last week, and it's like text to video, right? So you can literally like type a whatever block of text and then generate a short video. And so that's kind of like the tipping point, I think, of that exponential curve. Give it a couple years, and like you're going to be able to have people like generate like TV shows and maybe movies and things like that on the fly. And it can like almost be like personalized to every user, right? So maybe you have like a base form of content, right? Let's call it like the Avengers or Batman or something, right? But like you could take it in different directions, right? You can make it more dark, you can make it more rated G versus like rated R. You could kind of change outcomes potentially, and you could probably test this live against audiences and see how they react. And so I think like the production of content will have a lot more data backing it to reach mainstream audiences. But also, once mainstream audiences get it, I think they're going to have a chance to like personalize it to their own tastes and kind of have different experiences. And so, like what you see today, if we hit the same YouTube link, is pretty much the same for everyone, right? Maybe the comments are kind of filtered in a different order. Stuff like that. Maybe the next recommended videos are different for you to me. But imagine if the video itself is kind of like morphing based on personalized data around me, as well as like learning algorithms, things like that. And as I watch and interact with the video, if I rate something or I like comment, or maybe I scroll to a certain section, imagine if that video is actually just like changing on the fly, right?
Yeah.
Based on some of those data inputs. That'd be like really damn cool. Scary, but it's really, really cool.
Yeah, and I think that's exactly where we're going. Thank you so much, Matt. All right, it's time to
Yeah.
finish this off. The final question for you is, what is your favorite science fiction book, film, or TV show?
Oh, good question. Maybe too popularized of an answer, but I guess I'll just go back to The Matrix. The first time I saw that when I was like 15 or something, it was really, really eye-opening. And I think um, it is not only a really cool technological movie, right? Exploring these like tech concepts, but it's also a very philosophical one, right? Do you care about having, the full truth, or is ignorance bliss? And I think those are questions that like we as humans grapple with on a day-to-day basis. And oftentimes, like we face when we interact with technology, right? Whether it's crypto or AI, can you actually like see things as they are, or sometimes you want to see things the way that you want them to be. And there are times when technology disrupts certain groups of people, right? Like the Industrial Revolution was great for overall GDP and technological advancement and global health and comfort, but it meant that factory workers were displaced, right? And had to find new things to do. And some of them never did, and ended up were like not being able to get back on their feet, right? And so I think like some of these like overarching societal themes, personal themes, and then just like the concept of like this technology and perception of reality, all speak to me very, very powerfully.
Yeah, couldn't agree more. And of course, the Matrix popularized the idea that we may in fact be living in a simulation. Of course.
Yeah, 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 yeah.
All
Yeah,
right.
that'd be super meta.
Indeed. Yeah, I had so much fun talking to you today, Matt. Thanks for coming on the show and spending some time with us. Again, just close it out by telling people where they can find you on X and the different websites where they can learn all about Origin Protocol and Prime Staking and so on.
Yeah, yeah, sounds good. So my Twitter is just Matthew Liu, or I guess X, as you mentioned. You can also feel free to send me a Telegram message. It's Matthew C. Liu. I wasn't able to get the proper handle there. And then in terms of places that you can learn more about what we're working on, you can go to originprotocol.com. That's our corporate website. oeth.com is our leading DeFi product. And then primestaked.com is the new liquid restaking product. Thanks so much for having me. I really enjoyed the conversation as well, especially the hot take format that puts you on the spot a little bit. And hopefully the community and audience appreciates our discussion.
Yeah, couldn't have said it better. Thank you so much, Matt. All the best and bye for now.
Okay, thank you so much. Take care. Bye.
All right, there you go. That was Matt from Origin Protocol. Yes. Hey, that was cool. He was great. Had some great perspectives in the very famous crypto conversation hot take round. Very much enjoyed that. Hope you enjoyed listening to that, folks. We make it to the end of another show. Thanks for listening, team. This was the crypto conversation for Brave New Coin. ETH at 3,000. Who would have thought? All right. Bye for now.